Remind us why they need the money. It's kind of rather arduous around tax.
Yeah, I mean, there are a lot of long-standing employees at the firm. They want to cash out their restricted stock units. And part of that move will involve a looming tax bill. And that is, in effect, one of the reasons why they are raising this much. They are trying to raise about $4 billion, which is a pretty high sum. But again, we're talking about a company that went from a valuation of $100 million just a decade ago to almost $100 billion in 2021. It has come down significantly. We're talking about a round where they could be valued at $55 billion. But if you think about that, think about the fact that we're talking about a fintech firm that is in a position to report positive free cash flow. That makes it an exciting name.
Yeah.
And when the valuation has come down this much, you can be guaranteed that a lot of wealthy clients, a lot of big institutional investors would want to poke around and see if this is the right time to jump in.
Particularly as everyone's still talking about a certain list of names that could go public as and when the markets reopen, valuations become buoyant a little bit more. Just talk to us a little bit about how it could be structured. It's not just Goldman in on the deal, right?
No. So Goldman and JP Morgan are the two banks who have been mandated with trying to raise this money. And they are going to a wide swath of investors. That includes, big names in finance, in the tech world, VC firms. There is quite a big spectrum that they've gone out to. But equally important, and what we found interesting, was Goldman Sachs, for instance, opening it up to their high net worth clients. Previously, the biggest draw, if you're a client at one of these banks, was we can bring you in closer to the IPO. Now, with private companies wanting to stay private for longer, this is a way to augment your offerings. Goldman can go out there and say, let's create a special vehicle where all of you can pull in your cash and we will write one big check and hand it over to Stripe. Why would you not want to take that opportunity?
Remind us when this has been done before, because it sort of got echoes of what happened with Uber, right?
Uber is one example that comes to mind. That was a big deal. It was in 2015. Goldman Sachs did a $1.7 billion convertible note deal at that time. That was driven by their high net worth clients. But equally important, even if you look at recent examples, when a big venture capital firm like Tiger Global wants to raise a new fund, banks see an opportunity to create vehicles and go to their rich clients, people who are worth more than $25 million perhaps, and telling them that this is a way for you to get in on a big name, which in the past was only available to institutional investors.